One handle, two platforms. That handle is the only fingerprint they can't forge. If anyone DMs you for money, wallets, VIP access, or signals, it's a scam. I sell nothing. Ever. Now type 180 in the comments if you're locked in, because silver can be up 180% in 1 year and still crash today, and the truth they're hiding isn't a secret. It's the part nobody wants to learn. In silver, the trend is your friend, but the path is your enemy. Stop. This matters, because the same screen can show all of this at once. TradingEconomics says silver is up 180.71% versus a year ago. Their benchmark is a CFD that tracks the market. They also note silver hit an all-time high of 121.64 in January 2026. And in the same update window, they show silver down about 6.6% on March 3rd, 2026, trading in the low 80s. That's not a contradiction. That is the devil's metal doing its job, shaking you out. Now your FX Leaders source puts the viral framing on top of the raw tape. They say silver surged to about 90-20, a 182% increase over the past year, and they tie the demand narrative to the Middle East conflict, supply deficit talk, and silver's role in green energy. They also remind you silver hit a heart-stopping peak of 121.64 in late January, and they call 87.69 the must-hold line in the sand, with a potential slide into 82 on 84.90 if that breaks. So here's what you're getting in this voiceover: why the one-year number can be explosive while the one-day candle is brutal, what the market is really doing when it crashes after a monster run, and the exact map, levels plus behaviors, so your audience stops reacting like prey. Because right now, the internet is splitting into two camps. Camp A, silver is dead. Camp B, silver to $300 tomorrow. Both camps get farmed. The only camp that survives is Camp C, the map camp. Now listen carefully. The truth they're hiding is not that silver isn't strong. The truth is that silver bull markets are designed to feel fake, because silver has two identities and they fight each other during stress. Identity 1, safe haven, monetary hedge vibes. Identity 2, high beta positioning vehicle tied to leverage and industrial growth. Gold is mostly identity 1. Silver is both. So when the world is panicking, silver can explode. But when the world is deleveraging, silver can dump hard, even while the bigger trend stays intact. That's how you end up with up 180% in a year and crashing today. Now stop, pattern break. If gold is an elevator, silver is a staircase with trapdoors. Gold trends. Silver terrorizes. That's why you're here. Now let's extract the key material cleanly. From TradingEconomics, silver rose to about $89.60 earlier on March 3rd before the larger move. They also show silver falling to around $83.36 on March 3rd, down 6.63% on the day, while still massively higher year over year. They explicitly say the year over year number is based on a contract for difference, CFD benchmark. They say silver's all-time high is 121.64 in January 2026. They also reference the war backdrop, expected intensification of strikes and warnings about vessels in Hormuz, suggesting tanker traffic halted, i.e., a macro stress catalyst living under the price. From FX Leaders, silver around 90.20, up 182% over the past year. They blame a cocktail, Middle East conflict, plus supply deficit, plus green energy demand, solar and EVs. They highlight 87.69 as must-hold support and the 82.84.90 area as the next zone if that breaks. They include expert forecasts and an institutional playbook with entry targets stop, useful for a narrative map even if you don't treat it as gospel. Now, the part your title needs to deliver: how can silver be up 180% and still crash today? Here is the real answer: because a one-year move is driven by macro regime. And a one-day move is often driven by liquidity regime. Macro regime says structural demand, supply constraints, geopolitical hedging, capital rotation. Silver trends up. Liquidity regime says dollar spikes, yields move, margin calls, risk desks cut, options dealers hedge, silver flushes. In silver, liquidity regime can overpower macro regime temporarily. That's not hidden. That's what makes the move possible, because the big trend is fueled by weak hands getting shaken out. Now stop. Here comes the most important lesson you can teach your audience. Silver doesn't reward conviction. Silver charges you a toll first. That toll is volatility. So when silver dumps, your job isn't to scream manipulation or it's over. Your job is to classify the dump. Is it a flush or a break? Flush, jars forced selling, then fast rebound. Break. Demand disappears, bounces get weaker, price can't reclaim, and the only way to know is behavior after. Now, FX Leaders gives you a clean line in the sand. They call 87.69 the must-hold support, 200-period MA. If it breaks, they expect to slide into $82.00, 84.90, where whale buyers may step in. TradingEconomics literally shows silver trading in that same neighborhood on March 3rd, around $83 with a 6.6% daily drop. So your two sources are actually aligning on the battlefield. The crash zone is the $82, $85 band. Now, why does that band matter psychologically? Because it's where the market decides whether the move is still an uptrend with shakeouts or whether the shakeouts have turned into a deeper unwind. Now stop. Pattern break. In silver, bottoms are not where you feel confident. Bottoms are where you feel disgusted. Silver makes you swear you're done right before it reverses. That's why the truth feels hidden. It isn't hidden. It's uncomfortable. Now let's talk about the race to 100 framing because it's the trap that creates these crashes. FX Leaders is literally titled around Race for $100 starts now. $100 is not just a target. $100 is a magnet. Magnets create crowd behavior. Breakout chasers pile in near the number. Profit takers sell into that crowd. Stops cluster underneath. Then the market only needs one spark. Dollar strength, yields, risk on bounce, anything. And the stop cascade does the rest. That's how you get the pump and dump feel without needing a conspiracy. Now, TradingEconomics adds a key detail most people ignore. Their page is updated with commentary linking the move to war escalation expectations and shipping risk around Hormuz. That matters because it tells you this is not just a technical market. This is a macro event market. Macro event markets are the most violent markets because they reprice probabilities, not facts. Now, let's make this video addictive with the open loop the viewer really wants. If silver is up 180% in a year, what does that imply for what comes next? Answer: it implies two things at the same time. 1, the trend is powerful and can continue. 2, volatility is guaranteed and will try to shake you out again. So what comes next is not one path, it's a fork, and you can map the fork with your sources. Scenario A, the bull structure survives. For that to happen, the crash becomes a flush, meaning silver dips into $82 or $85, finds demand, and rebounds quickly. TradingEconomics year-over-year strength tells you the broader bid exists. FX Leaders' whale buyer zone points to the same band. Scenario B, the bull structure pauses or unwinds. For that to happen, the crash becomes a break, meaning silver breaks into the zone, can't rebound, and every bounce gets weaker. That's when the market shifts from hard asset repricing back to liquidity squeeze plus growth fear. Now stop. Here's the key you should hammer for retention. The next move is decided by rebound speed, not by your belief, not by your target. By rebound speed. Fast rebound, walk, flush. Slow bleed, walk, break. Now, FX Leaders also includes a section called the Pros Playbook. I'm going to extract it as narrative fuel, not as gospel. They say buy the dip entry between $87.70 and $88.50. Targets $91.30, then $97.50. Stop below $84.90. Whether you trade that exact plan or not, it gives you a powerful script element. Even their risk management line places $84.90 as a critical floor. And TradingEconomics shows silver printing the low 80s right now. So the market is literally testing the zone where risk management becomes reality. That's the narrative engine. Now I'm going to deliver the truth they're hiding in the cleanest way possible. They're not hiding the rally, they're hiding the path. They show you the one-year chart. They don't show you the psychological war in the middle, because if you lived through the middle, you wouldn't believe the end was possible. That's how silver works. Now, we close with a watch list your viewers can screenshot mentally. Here's the 48-hour checklist built only from your two sources. Watch 1, 87.69. FX Leaders calls it the must-hold support line. If price reclaims above it and holds, the flush is ending. If price stays below it, you're in the danger zone. Watch 2, 82.00, 84.90. FX Leaders calls this the next zone if 87.69 breaks. TradingEconomics shows silver trading around $83 with a 6.6% daily drop, meaning we are literally inside this zone. This is the battlefield. Watch 3, 90.20 narrative anchor. FX Leaders headline price is 90.20, and the race to 100 framing is built on that. If silver can reclaim $90 after the flush, the race narrative returns. If it can't, the market is still cleansing. Watch 4, $121.64 reference. Both sources cite the January peak at $121.64. That's the mania print. The closer price gets to it again, the more violent the tape becomes. Watch 5, year-over-year reality. Trading Economics says plus 180.71% year over year. That's your reminder. A crash today can still be a pullback inside a historic uptrend. Now we close OG style. 3 takeaways, then the cliffhanger, then the disclaimer. Takeaway 1. Trading Economics reports silver down about 6.6% on March 3rd, 2026, trading around $83, while still up about 180.71% versus a year ago, and notes an all-time high of 121.64 in January 2026. Takeaway 2. FX Leader says silver is around 90-20 with a 182% one-year surge and frames the move around war risk demand, supply deficit talk, and green energy demand, while highlighting 87.69 as the must-hold support and 82.84.90 as the next buy zone if it breaks. Takeaway 3. The truth they're hiding is that silver's bull markets are made of violent flushes. The trend and the path are different, and silver's job is to punish anyone who can't survive the path. Cliffhanger. If silver rebounds fast out of 82.85 today was a flush, and the race to 100 narrative is still alive. If it can't rebound and keeps bleeding, then the cleanse isn't done, and the market is telling you to respect liquidity first. This isn't financial advice. This is financial warfare education.